Hi, it's Bushy Martin here from Clear. Just thought I'd spend a few minutes with you talking to those of you that have showed an interest in the US property market over the last couple of years. As you know, we've used ourselves as guinea pigs to make sure that we iron out opportunities over there to make sure that if you are looking to invest in the US, you can avoid some of the pitfalls and make sure that you structure it the right way and you buy the right property in the right place. Fair to say that been a lot of promise with the US, as we all know. Cheap properties with big promises on rental yields and capital growth. Our most recent tour to the US, we did an extensive 10 weeks in a number of places, which based on desktop background work that we did here, indicated where we thought the opportunities were. There's certainly a lot of positive moves in the US in terms of the improvements in the economy, and it's information we don't hear much about here, but there's a really bullish improvement in things generally across the board in the US at the moment. As a consequence of that, the property prices have increased quite substantially. So the properties that we bought for $30,000 and $35,000, you're now having to spend anywhere between $80,000 and $250,000 to do the same thing. But the biggest change we saw was that the institutional fund managers in the US are now buying properties as an asset class, which means there's very few properties left, which is putting pressure on demand, which is pushing the prices up. Now, I guess a couple of the issues that we saw in the US were that while the big promises of very strong yields of between 25 and 30% were talked about extensively, the real yields, once you start to look at vacancy factors, once you start to look at all of the on-costs involved in owning and managing property over there, over and above what you would experience here in Australia, tend to reduce the net yields quite substantially. So a 30% yield is looking like 12 or 15%. When you compare that with what we're doing in Adelaide, which is around the 5% mark, is that worth the risk, is question number one. More importantly though, for most of us who are investing in property, we're looking for capital growth. Now, what's disappointed us to some degree is that in most areas across the US there hasn't been much capital growth in recent times, and probably not likely to be. There are cash flow opportunities if you're looking for that in the US, if you're at the stage of your investing career where you've accumulated your asset base and you're now looking to convert that to cash flow. However, the biggest missing link in the US is the quality of property management. And sadly to say, the quality of property management here in South Australia and Australia generally is way better than what you're ever going to experience in the US. And if you're like me and you don't want to buy a job when you buy an investment property, you're going to struggle with the US. We sacked everyone that was involved in the properties that we bought a couple of years ago, and we've started again. We're feeling better about those people that in relation to it, but the proof will be in the pie. Sadly, if you are still keen to buy in the US, and there are areas to look at, you will be faced with having to do late night Skype calls and a lot of follow-up work to make sure that things are happening. And you'll need to engage someone independent of the process in the US that you can trust, that is going to look after your property and be your ears and eyes on the ground. That's a cost that we don't bear here, and it's a cost that will affect the performance of the property. So I guess from a business perspective, we're not going to be actively supporting ongoing investment in the US. We'll sit on the properties we've got, not likely to see any capital growth. Their rental yields will be okay, but it's the people factor that is going to be the biggest issue. So if you do want to catch up with me and talk in detail, there are some hot spots that if you're very keen to get in the US, Dallas in Texas is a really good opportunity. You can still pick up properties there between 80 and 150,000. There's some good locations and a good support team also in Las Vegas if you're looking at those opportunities. Use us as a resource. I can give you some first-hand knowledge on various areas in the US now if you want to go down that road, and we'll be happy to give you the names and contact details of the people that we have got the confidence in now. But our basic view of where things are heading, and given the opportunities that we're going to experience here locally, you'd be better off investing your good hard-earned money in South Australia so you can touch and feel it. You'll get better capital growth, better yields over time with a manageable asset. So I hope that's given you a little bit of a sense of what's happening over there. As I say, don't hesitate to pick up the phone or send me an email if you'd like some more information, and we'll keep you abreast of other opportunities as they arise. So I appreciate your time. Thank you.